prices may move over the next couple of weeks and months with regards to COVID-19, it's really based on this model. One good example is at the beginning of this year in February when I released this report. The report was actually titled Shutdown Risk. As I mentioned earlier, we were seeing risks coming out from COVID-19, risks that the markets had failed to see. Markets were thinking it's more like SARS, but actually it turns out to be more like H1N1. Markets were thinking that it's going to be confined to China. We thought that actually no, with this kind of characteristics, COVID-19 would actually spread to the rest of the world. And when those two facts became known, the markets actually adjusted because they had initially underestimated the risk. Okay, so today, what we need to do is we need to anchor what's a so-called scenario with regards to COVID-19, which we think is the most likely scenario, and then ask ourselves, has the market discounted enough of the risk associated with this scenario? Of course, if the market has underestimated the risk, therefore, meaning to say it has actually not gone down enough, then what will happen is as these risks emerge, the markets will start to adjust lower. And vice versa, if the market has overcompensated for that risk, meaning to say it expects a worst case scenario but turns out it's not, then of course the markets will adjust higher. So that's really the way we would want to assess how markets are going to move going ahead with respect to COVID-19. In our view, and I will evidence this, or at least I will explain this in the slides ahead, is we think that the markets currently underestimate the risk of COVID-19, and there is a likelihood that the markets will adjust lower as the risks become apparent and the markets then start to price in at that point those risks.